Welcome to Real Money Talks, how to make money, manage money, and invest money. Your Real Money Talks host, Loral Langmeyer, gets straight to the point about what it actually takes to make money and build lasting wealth in today's changing economic climate. If you're ready to get the financial results you've always dreamed of, keep listening. Real Money Talks is the right place for you. And now here's your host, Loral Langmeyer.
Hi, this is Loral, and welcome back to Loral's Real Money Talks, a podcast about making money. How do you keep and really control your money? And how do you get higher returns in off Wall Street investing? And you meet a lot of extraordinary team. See, the biggest thing in wealth planning is your team. Too many people are trying to do it alone and or just with the traditional financial planner over, at a traditional financial house. So we're teaching you how do you find really, I always say what the sharks do. How do you become a shark? If you had the money, how would you do due diligence? How would you find deals? We just found an awesome marina in Texas that we bought and we're rehabbing. So a lot of fun here off Wall Street. Today, I actually have a very unique guest because it is about being on Wall Street in a very specific way. So Randy Tate's with me, founder of Flipping Wall Street. So welcome, Randy, to Loral's Real Money Talks.
Thanks, Laurel. Appreciate being here.
So talk a little bit about Flipping Wall Street and how you got here, because you kind of grew up through our community and advocate of off Wall Street as well. Where's that fine line that you and I want you to explain it. Just there's such a fine line. Really, the kind of only one way I am on Wall Street, which is through Flipping Wall Street.
Yeah, and one of the lines, the finest line is how you're on Wall Street. And the traditional, average, regular person really doesn't have a way to be on Wall Street like the really, really rich and wealthy elite of Wall Street. And so if we go along like the sheep in our mutual funds and our IRAs, and we have an advisor put our money in funds and manage it for us, it's a losing proposition because the fees associated with the way in which we play on Wall Street eat up the gains that we make when Wall Street goes up. And we still pay those fees when Wall Street goes down.
and there's so much arbitrage, like you said, in the way that I would just say the few and the select, those who actually take the run on the way up, vested shares, it's just a different game. So let's just get to Flipping Wall Street. So how did it get conceived? There are a lot of robotic traders. I know you and I, have been involved in many. So talk just about how the conception of Flipping Wall Street happened. I think that's always interesting for people that are listening to know how just a business gets started and conceptualized and then gets up into revenue.
If you look at the way it started, you had a couple of people that were really tired of the way Wall Street operates, the way that the elite only get to play. And my business partner, Kelly Korshak, is one of those folks that managed the money for those elite. And so when we began having conversations, and my background, particularly in Live Out Loud, and just as an entrepreneur in general, had led me to an executive position at a software company. So I learned the SaaS model, the Silicon Valley way, I learned over the last 8-10 years, and I've learned it very well. Well, when I partnered with Kelly Korshak, who knows Wall Street and knows money, then we started formulating a way to do it differently. And just to make sure we're clear on who Kelly is, I like to edify him a little on my chats. This guy got degrees from Stanford in statistics, finance, and mathematics, which, okay, you got a Stanford degree, but he got all three by the age of 19. And so he thinks a little differently, ran risk management for Deutsche Bank and knows what the uber wealthy do. So what we've built is a system for the average individual to participate on Wall Street through technology in a way that up until now was reserved for the people with 9 zeros in their bank account.
Well, and I'm glad that you edified Kelly because he is brilliant. And just all of these softwares and the call it the engines behind the machine that runs Flipping Wall Street are just pristinely done by him. Yep. So talk a little bit about what Flipping Wall Street is. It's software.
Yeah, we're a software company.
Automated trader.
Yep. And what we do is we are a automated trader. So I ask people the question this: if you could hire Kelly, one of the world's best hedge fund managers, to privately manage your $10,000 or $20,000 or $100,000 or $500,000 and have him on it 24/7 doing it all the time for you, what would you expect to pay for that? Well, we've automated it so that Kelly's brain is automated and put in the cloud so that he can trade your accounts for you through our software. And there's a lot of technology behind it. And I don't want to jump down too far into the weeds, but we build each individual person a unique hedge fund, allowing them to participate the way only the wealthy do.
And so when you say he actually trades them, you have 12 different options. So talk a little bit about how that works.
Yeah.
So folks can buy the software. They can choose. Yep. They're really not getting Kelly doing their financial advice. They're really getting Kelly doing their sequence of choices, I would say.
I like to say we've stuffed Kelly's mathematical algorithms and ability to automate inside their computer, because it is trading the market the exact way Kelly would trade it, but it's done automatically and with a robot. And so there are robotic traders out there that exist, but there's a couple of things that are different. The generic robotic trading place, companies like Betterment and Wealthfront, they have good products, but what they do is they do what we refer to as bucket trade. They'll take Loral stock and Randy's stock and everybody else's stock, and they have one algorithm and they throw it in a bucket like a washing machine, and they all trade together under the same thing. When you build a true hedge fund, each individual stock in an individual's portfolio gets its own unique algorithm, and they trade independently of the rest. So you do have, in essence, private, individualized, active management of your portfolio through the software.
And so, the Kelly and the algorithms are really the key distinction. So if someone's listening to this podcast and doesn't know anything about the algorithms and how they're built, just give a little more insight to how distinctively powerful, what they're right?
Yeah.
It's extraordinary.
And people ask me this a lot. They're like, hey, what's in the algorithm? And I always say a bunch of math. And it sounds funny, but that's the truth. The reality is Wall Street has created a bunch of myths to scare people into behaving the way the masses currently behave. Things like diversify your portfolio. Well, that's actually a myth. You don't want to diversify your portfolio. Now, you might want to diversify the verticals of your portfolio, real estate, gas and oil, flipping Wall Street, but inside your portfolio, you do not want to diversify. Our portfolios generally contain somewhere between 3 and 6 stocks total. So you'll have Facebook, Apple, and Amazon, and that'll be it. And the ability for our software to time the market, there's another myth, that big myth that says you can't time the market, just put your money in a safe fund and leave it there. That's crap. That's for the sheep that just want to float along and be part of the market. And think of that as floating down the river with no rudder, no motor, and no oars. We want to beat the market. We do beat the market. And we do that with these algorithms because they will time the market in such a manner that the math will tell the software when to come out. Let me be really clear on that. The individual person does not have to know or do anything. The software buys and sells for you based on the algorithms.
Then talk a little bit about the technology and why that's so critical and how that is set up.
We've spent a lot of money, several $1 million, to build proprietary software. It's our code. We wrote it. We own it. Nobody else has it. This can't be done anywhere else. So when you talk about the level of technology that goes into it, the ability to time the market while you're connected live to it is, again, products that are reserved for the elite of Wall Street. We now have it for the individual user. And here's the other kicker, Laurel. I just talked to a person, about 2-3 weeks ago. They had $8 million in a big name institution. And they wanted to move that money out because they were paying, don't choke when I say this, $20,000 a quarter in fees.
Oh, no, that actually is less. I was thinking you were going to head well past 6 figures in the year, which is close, you're getting up there, but it's ridiculous. And people don't know. And I think what I want to clarify when you keep saying the elite use, knowing the Nigerian brothers and, a lot of the CNBC folks from, back in the TV days when I was there, they aren't just magical brains. They use different, I'm going to call them structures, algorithms, technologies to support their decisions.
Yes.
They all do. But those systems are so expensive that the average user can't use them. So I just want to clarify that when you say the uber elite, I mean, we're talking about very sophisticated people who have access to these platforms and trading algorithms and technology that you can't buy. So for, a very, very small fraction, you actually get to do what they do. Because I think, Randy, a lot of people just think, oh, you're a trader. Oh, you're just so magically knowledgeable. And it's like, they use so many systems, technologies, and structures to help them. So maybe just clarify that a little bit when you say that.
I can. And I can put
most people don't realize that there's even, like, maybe go back to Kelly. Like, Kelly built the platform for, was it TD Waterhouse? Who did he build?
Deutsche Bank.
Yeah, they use this trading system. So kind of use that as a comparison to the kind of cost structure and really benefit that's getting to the individual user finally. I mean, you're not Deutsche Bank out there listening to this, I doubt. And you don't have the kind of millions and millions and millions and millions of dollars to pay for that platform to be built for yourself.
Yep, I can edify it real clearly, and this will make everybody understand what we got. If you would have liked Kelly in his previous life, it was a $100 million buy-in. So I'll say that one more time. $100 million. That's what you had to have in investable assets or cash to be on this platform. And there was a waiting list. So that's the kind of power we're talking about. And that guy that was spending 20 grand a month, we are able to do better, to get him better returns than he was getting for 20 grand a month for about $200 a year. So if that's not eye-opening, I don't know what is.
Exactly.
The world of Wall Street is not set up for the average individual. It's set up for the systems, it's set up for Wall Street, and it's rigged.
Totally rigged. And it's got a lot of emotional, and it has a lot of, I would say, emotional unintelligence, but that's all right. So I want to go to the person that's listening to our podcast that says, I'm not really interested in learning about the stock market. It's going to be complicated. I've gone to stock classes, still didn't, get it, understand it. It takes too much time. All of those objections. Let's answer those.
Yeah, I get that question a lot. And the answer to that is give me an hour, because it takes about an hour to get you all set up. Laurel, you just went through it a little while ago, and you'll get set up. You don't have to do everything yourself. There is really nothing to learn if you don't want to learn about the stock market. If you want to learn, we'll teach you. But that's not the intent. The intent is for particularly the entrepreneur, you guys are busy. You got things to do. You got a purpose and a mission in the world. And we want to make sure you're doing something to take care of your future. And that's what we're set up to do. We're going to beat the market every year. We're going to, most of the time get you a double-digit return, some years much more. And we're going to provide a consistent platform where you don't have to think. You don't have to learn. It is truly a set it and forget it platform.
So talk a little bit about when you first, before we go to the kind of usability of it, because it is very, very easy. And again, for the busy person, it just turns on and turns off. I just want to go back to just reinforce the traditional financial planner, right, and the diversified, portfolios that you talked about. Because when we went through and, we've set ours, we did choose different stocks. So speak a little bit to not only the fees and the tax and all of that, and honestly, every financial planner, they make money on the way in and out of the market where you get what's left over. And I don't think people realize that. So kind of what's the difference really between that traditional financial planner that is easily trading and doing so well for you, right? So let's talk about that a little more, because I want to really shock people. I love shocking people from the stage. And, you're back out doing our 3-day workshop on Off Wall Street, when one of our wealth team members can actually figure out very quickly and calculate the fees and the taxes, I should say, not hidden, but very non-transparent.
Yeah, so here's what we don't realize. When we go to an advisor, whether it's big business, Wells Fargo, or your local little advisor down on the corner, either way, they're going to charge you a series of fees. Now, understand that's just the first level. And they may tell you, my fees, because they disclose them up front, I'm only going to charge you 0.5%, 1%, 2%, depending on how much money you have. And then that's pretty much all they say. And you say, okay, great. You're going to manage it 1%. That's fair. Well, then they put you in 3 or 4 different funds. Each of those funds is going to charge you upfront a little bit of a percent, 1%, 2%, maybe 3%. And then there are management and execution fees that are behind the scenes that you don't even see. So in a great year like last year, and there were mutual funds last year because the stock market was insane, that did 10, 12% in mutual funds. But what we don't notice is that there was another 4, 5, or 6% taken out the back in fees. They don't talk about your net of 5 or 6% and possibly one of the best years the market's ever had. They're like, hey, look, you did 12% and you're locked in. Yay, you. Well, that
yeah, you.
That's how they approach it. And I also want to edify it. It's not their fault. This is the way the system's always ran. This is the way they always do it. I liken it back to the cell phone days when people paid for their cell phone by the minute. And then they talked over the minutes. And all of a sudden they got a bill that they thought was going to be $59 and it's $300. Well, you talked for 6 minutes in this time zone and you went over at this time of the day and then you did and then you did. And there's just little tiny nickel and dime fees everywhere. We don't play the fee game like that. We completely change it, and your brokerage account will only ever be charged $1 a trade. And on this platform, you will only make at max 100, 150 trades a year. And I'm being very generous. Most likely you're going to make 30 or 40. So you're going to be out somewhere between 30 and $100 in brokerage fees for the whole year. It's compounded over time. Your account would be over a 10-year investment period. You would have 50% more just on fees if the advisor was able to get you the same returns we get. That should shock people.
So let's talk about the practical side. So you get the software. How does it get installed? How do I make decisions? Do you have, customer support help? How does this all work so I can just get up and running? And I know you can't do claims and things, but I'm just going to say inside our community of the thousands of units that people use, average is 15, 30. I mean, I know people getting in the 30 plus percent.
We had people get over 100 last year, but last year's an anomaly. And I'm not telling people they're going to get 100% return. That's crazy. What we are talking about, though, is double digits because of the math. The algorithm's not going to allow you to absorb the dips of the market. It's going to pull you out before the dips happen because we can time it. So what I can tell you is this: 89% of our portfolios for 2017 beat the market by more than 10%. Now, that was in a year that the market in a buy and hold did the best possibly it's ever done. It had a phenomenal 2017, and yet we still beat it. And we talk about buy and hold and returns and how that works. You take a product like Apple. Apple is a poster child for buy and hold. Apple, had you bought it and held it over the last 12 years, you could have made upwards of 7,000%. Using our software, you would have had about 50 trades and done 11,000%. So it's about being able to time the market, go in and out when you can. The practicality of it is you buy the software. It's simple as that, which in the eyes of the IRS, when you buy the software, it has nothing to do with your trading account. And I know you'll love this part of the conversation, Laurel. When you buy the software, none of the money comes out of your brokerage. The IRS looks at your purchase of the software as a business purchase. Whether you're going to go make a bunch of referrals and get referral revenue is irrelevant. The way it's viewed in the eyes of the IRS is as a business startup. So you've got a small fee that you get a tax write-off on, and then you have a flat monthly subscription to own the software. Again, part of your business, tax deductible, so you can actually be trading at such a lower cost and get such higher returns. It is an absolute no-brainer.
Yeah, it's perfect. If anyone is interested and wants to know more, as always with our podcast, go to Ask Loral, AskLoral, askloral.com, and put in your name, phone number, and email, make a request, or ask a question. Either way, there will also be, I know Randy well enough that, if you really wanted a one-on-one conversation, just make that request inside the Ask Loral box. As well, there will be a link for the software. And if you need a further conversation, just say, I went and looked at the link, still want to have a conversation, and just stay in touch with us, and we will make sure that you get a hold of it. Randy, what else would you tell folks about this year, 2018? I know you're with Kelly a lot. You said there will be another 17. What's some predictions for 18, and the whole world's talking about a correction of this hot market that's been happening.
I'll give you 2 nuggets that we're working in. Nugget number 1 is as of February 1st, you will also be able to trade Bitcoin inside of our platform. So we are the only platform in the world where you could have Facebook and Bitcoin in the same portfolio.
I love it.
More to come on that. That's the first big nugget. And the second big nugget is this. Our economy is exploding. The tax breaks that are coming down the pipe for small businesses and for companies are going to do nothing but fuel growth. This growth isn't going anywhere, at least through this presidency. Whether you like Trump, don't like Trump, that's not what I'm saying. What I'm saying is the economy is going to continue to boom through this presidency. As the economy continues to boom, the people that are guessing, and let me really stress that, they're guessing. It's a guess if they tell you they think the market's going down. Don't listen to the talking heads on TV. They're entertainers. They're not experts. So don't listen to that nonsense about the correction is imminent. No, it's not. We know lots of people that are losing their proverbial shirts trying to short the market. In order to short the market, you must have one thing, an opinion. And Kelly will tell you, opinions are always wrong and math does not lie. So stick with the mathematics, do what we're suggesting you do, and we would like all of you to come join us. How's that?
All right. Well, Randy, I appreciate you being on today. Again, you're all listening to Loral's Real Money Talk, and we are here to help you in any way to make money, keep money, invest it with the team. If you have any questions, go to askloral.com, ASKLORAL, and just say, I want to talk to Randy. I want to learn more about flipping Wall Street, and make 2018 the greatest year that you have ever had. What would you just say about results? We do this whole thing, I think Randy, we don't have any resolutions around Live Out Loud. We only have results. So what would you just in general say about getting a result and getting a goal? You've gotten what you've wanted this year and the years past. So what are some of those techniques?
Yeah, I think that the techniques is to find a way into the market. If you don't have your own private Kelly, we're a great option. The market's going to grow. The economy is going to grow. So, Loral talks about make money, save money, invest money, keep your money, invest your money. So get your money to work. Don't just let it sit there in an IRA or in some little 401k making 4 or 5%. Do not miss the ride we're on. Get your money to work. And if you haven't seen Loral speak, get out and see her speak. Get to one of her 3 days. Get in front of her. She is a master at helping people get sorted on how to play this game. And the wealth game, it's as good as it's ever been right now. And I would encourage everybody to just get in it. Because I do know one thing, Loral. If you do not participate, nothing will happen. If you continue to do what you've done, you're just going to keep getting what you got. And so my advice for 2018 and my prediction is that it's just going to continue on an upward trend. And I want to encourage everybody to get involved.
Absolutely. Randy, thank you. You'll be back another time. And again, to the workshops he spoke of, off Wall Street assets. Again, go to liveoutloud.com. That's our main site. And we have workshops every month. You'll meet Randy out there. You'll meet other wealth team members. And you will make money. You'll design a portfolio of your own and learn. I would say if you're not going to learn this money conversation in this lifetime, I don't know when you are. So you can't get ready, just jump. So thanks, Randy. And all of you again, keep watching, keep listening. Make this viral. If you enjoyed these conversations, pass them on to your family and your friends. And then we're building a huge community around the right conversation with money. So take care, and we'll be back on Loral's Real Money Talk.
Thank you for joining Loral for this segment of Real Money Talks, how to make money, manage money, and invest money. To continue this new conversation and to find free resources to support your wealth creation, visit askloral.com/podcast gifts. That's askloral.com/podcast gifts. Thanks for listening and join us again soon. New episodes are released every week.